Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
The question here that was next probably lends itself really well to where I'm heading, which is mention the difference between knowing a pullback and a reversal of the trend. Again, it's going to be the difference between where prices are within the context of, and let me make sure I got your whole question here, the context of where prices are within the wave. So if the market, for example, this case here, this marked down on the daily, or even a mark down on the 240, what I'm looking for in terms of being comfortable, for example, let's go from left to right in this entire chart. I'm not going to pick a best case scenario. I'm not going to try to. Let's go from left to right across this entire. This is basically a 240-minute chart from the 12th of August to the current time. Let's go through this together. So, what's our first strategy? Looking for that sideways market. So the first thing you want to do is read the direction of the wave, because you want to know if we're trending or non-trending, right? So here we're not trending. Here we're slightly trending. So hard left edge, slightly trending market. I'm looking at puts. It's a slightly downtrending market, and I'm looking to buy those puts on some sort of bounce up into the wave. It could be the bottom line of the wave. It could sink into the wave, but as long as prices can more or less keep the downtrend contained on the bounce, almost like a safety net, I feel comfortable. What happened here? We transitioned, right? I don't know which to buy, puts or calls, do I? So this is where you might use your more traditional charting methodologies, whatever it is you do now to trade sideways markets, in order to determine if you're going to buy a put or buy a call. Maybe you're going to bracket the market. You're going to buy a little bit of each. Okay? It really depends upon what your current strategy is. And by the way, don't throw your current strategies out the window. They're giving you insight into market direction if they're good ones and you prep them, and you can absolutely use that in your options trading. All right. So sideways market, I could bracket, or I could use whatever typical tool. I might use an MACD personally to help determine which direction I'm going to buy in terms of put or call. What happens here? We transitioned out of that quiet, bored, confused market and went into downtrend. Well, the market broke downward. So if I had any calls, I would go ahead and liquidate those, and I benefit from my puts as the market moves lower. On corrections such as here, I'm looking for opportunities to do what? Buy more puts, right? But this market, this bar, I should say, this candle pierced the resistance, the containment of this wave, didn't it? As soon as that starts happening, it's very likely that the market cycle is going to start to shift. So you might have bought a put going into this, but this should be a caution. There should be a warning that the wave's no longer containing this downtrend, and it's very likely you may begin transition into what? Either the opposite side of the opposite trend, or into a sideways market, which is what we kind of had for a little bit. In fact, I wouldn't call this sideways. This is that confused market. Okay, it's not quite a trend. It's kind of getting confused. It's really ugly, isn't it? How do you know it's ugly? Prices are piercing the wave. There's no longer any containment. That's your first clue. Look at the angle of the wave. It starts to get lumpy. I mean, I talked earlier how the wave has the nuances of the mood of the market. No, that's exactly what it's doing here. Notice how it gets lumpy. Prices are piercing it. This tells me to stay away or begin pricing the options to see if the volatility is dropping. I might want to bracket again. Okay? But I know that the trend is really no longer as strong or as stable as it was earlier. Okay? The market starts moving up here. Notice that we had a little bit of a stall, and then the market starts moving up. So if the market starts moving up at 12 to 2, I am not looking at puts any longer. The market direction is telling me it's an uptrend, so I'm looking at calls. Now, I really didn't have much of a sideways market, confused or bored here, did I? So what happens? I'm relegated to doing plan B, which is on these pullbacks to the wave, where the wave is able to contain the correction, I'm buying calls into these pullbacks, and I was able to do that a number of times. Before, once again, prices started to transition here, didn't they? Take a look at the wave. They started to transition a little bit again. They pierced the containment of that wave in the uptrend. I know the market's going under what? Another transition. This is a 4-hour chart, okay? This so far is August 12th now to September 3rd. So you can see how many different opportunities you would have had and how many different trades and options you could have bought and then liquidated. Okay, I like to use the word bought and liquidated. I don't want to use the word option, selling, because I don't want to confuse it with writing premium. So I buy them and then I liquidate them. So again, I take a look at the wave. The more I can get a good 12 to 2 or 4 to 6 angle out of it, the steeper it's moving up or down, the more confidence I have in the trend, the more confident I am of buying puts in the downtrend or buying calls in an uptrend. What happened here? Not really steep, it wasn't. And certainly the wave was unable to contain prices when they bounced. There's my warning. Okay? There's my warning. Prices moved down pretty sharply. And again, what happened here? Prices got sideways. Look at the wave. So I could bracket the market again. And this is going through relatively quickly because I'm looking at a 4-hour chart. So you can see why I don't like going any shorter than 4 hours, because I need to give the market some time to let the psychology set, let the volatility come down or go up. And sometimes I find on shorter term time frames, that's a lot to expect out of a 5 or 15 or 30 or 60-minute chart. So 240 is short a time frame as I will recommend. Okay, this would happen obviously much slower on a daily. So sideways market cycle, I could bracket, or I could use an MACD or whatever indicator I use to confirm breakouts or breakdowns, and off to the races again. So again, everything starts with the direction of these moving averages. The direction of the moving averages tell me whether I should be moving forward with caution. The way prices interact with those moving averages tell me if I should be exercising caution. And then when they start to move up strongly, that's when I can determine whether I need to liquidate the options that I might have bought already, or whether I could start playing pullback entries. Okay? Now the wave isn't the only option you've got as far as pullback entries. If you like Fibonacci, pull some Fibonacci's here. You can play pullbacks to 38.2 or 50% retracement. One of the things I will tell you is it's going to do a lot of good when you start trading these options to stay in touch with the current pricing and again, do what I call shopping. You don't know what a good deal is unless you can compare the way the options premium, the pricing, the cost changes when the market moves up higher, moves down lower, or corrects an uptrend or corrects a downtrend. The more you get a pulse for the way these prices shift, the better you're going to get at timing your entries. I will tell you that. Okay? So if I go to a daily chart right now, what am I doing? I'm pricing those options, aren't I? I'm looking for getting into some nice, cheap, low volatility options based upon the fact that the daily chart kind of stuck in a range. I wouldn't call it bored, but I sure as heck would call it confused.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.